Special guest with us today, David Schroeder is the marketing director at Monetary Gold, an advertiser on this show where he has led the company's marketing efforts for more than 8 years. He is widely recognized as an early pioneer in the digital marketing space and has spent more than 30 years in advertising, marketing, and media buying and expertise. He now directs toward investor education and client acquisition in the precious metals industry. Welcome to the show, David Schroeder. Hey, David, how are you?
Hey, Jimmy, I'm doing well. Thank you for having me. It's nice to see you.
Nice to see you. Well, the big news is that gold is going crazy, right? So gold hit a record high, and so did silver at a 14-year high. This Wall Street bank says the two other commodities will join the party. Let me just give you a little. Gold was headed for a fresh record on Monday, and silver hit a more than decade high, with Citigroup strategists predicting the rally for the precious metals to continue and to carry other metals. Gold jumped $44.40 or 1.2% to $3,750 an ounce early Monday, putting it on the path for a fresh closing high. Potentially, it's 36 this year. The contract also set a new intraday high, reaching $3,753 an ounce, according to Dow Jones market data. Now, here's another article. Gold holds steady as investors await key U.S. First of all, let me just ask you, why do you think gold has hit such a high?
Oh, there's several factors why gold is going through the roof. One of the biggest ones, obviously, is inflation and high prices. You know, we saw some severe high prices during the Biden-Harris administration. A lot of those prices have come down somewhat, but they're still at pretty highs. Gas, petroleum, just look at Los Angeles. It's between $4.75 to $7.50 per gallon just in Los Angeles. Things like that. We've got bricks that people are worried about. High debt. We've got $37 trillion of debt, and we're adding $1 trillion of debt every 100 days to the debt. So there are a lot of things that are causing gold to go through the roof. And I'm not surprised. I mean, today, silver is at $45 per ounce. Those are brand new highs. And economists are saying we expect to see that hit $80 by either the end of the year or the first quarter of 2026.
So you're saying that they're predicting that gold will go up from $45 to $80?
Silver.
Oh, silver.
Yes.
Okay, I'm sorry.
Silver.
Okay, silver.
Yeah. So they're expecting silver to bust through this $45 price top right now by the end of this year or the first quarter of next year. That's how incredible silver is doing. And the reason being is, silver is used in almost everything now. Your electric vehicle batteries, the U.S. military. I saw an article earlier this year about how the U.S. military is using silver. Silver is used in almost everything, from missiles to binoculars to the instrumentation panels in the planes that they use, solar panels. 58% of the use of silver is industrial. So I'm not surprised to finally see silver taking off. And with all of the economic pressures and the pressure on the dollar, I'm not surprised to see gold going through the roof at $37.50.
So when you say pressure on the dollar, what do you mean by pressure on the dollar? Does that mean inflation?
So Donald Trump has talked about kind of devaluing the dollar to help boost the economy. I'm not sure that I'm a big fan of that personally, but look, Bank of America just came out 4 weeks ago and said that the US dollar has lost 10.7% of its value since January 1st of this year. So that means if you have, as a retiree, let's say you've got $100,000 in your bank account and the dollar has lost 9.7% of its, or 10.7% of its value, that means now you've got $90,000 worth of purchasing power. So you've just lost $10,000 that would, pay for several months of your mortgage or your food or your utility bills, or your vehicle. So we're losing value in the dollar. On top of that, you've got the BRICS nations. That's 5 nations that are trying to create a digital currency that will allow them to no longer rely on the dollar or U.S. treasuries as the foundation for their country, for their um, economic support. There are another 140 nations in line waiting to join the BRICS nations. If that economic block of countries actually comes to pass with passing that digital dollar and creating that digital currency, that means we will no longer be able to sanction rogue nations that are doing things, acting as bad actors. We will no longer have control over them. And all of these things put pressure on the dollar and make the dollar less attractive as an investment for other nations. On top of that, we just had 2 economists come out within the last 2 weeks that said that all of the global central banks, all of them, now are holding more gold than they're holding U.S. treasuries. So U.S. treasuries now are becoming an investment for these nations that they're poo-pooing. They don't think we can service $37 trillion of debt. And on top of that, last year, the year before, Janet Yellen stood before the Senate Banking Finance Committee saying, well, we believe that the country can sustain having the debt go up to $50 trillion. $50 trillion. Who's going to pay that back? Your children's children will still be paying off that debt.
So,
I mean, go ahead.
So that's why people are parking their money in gold as opposed to parking it in U.S. dollars, and that's why the dollar is losing its value. That's why housing. That's a big reason why housing prices go up so much faster. It's not because the house is the exact same piece of property. It's the same material. It's just that your dollar buying power has shrunk. And that's been the big problem ever since we went off the gold standard. And so that's why things keep. And so when there's inflation, gold becomes more attractive, obviously, because your dollar becomes worth less and gold actually increases in value because gold doesn't really lose its value. The dollar does, right?
Correct. That's correct.
Okay. So go ahead.
So I'm going to say, so on that note about coming off of the gold standard, so in 71, when Richard Nixon signed that and took us off the gold standard, we had, I think it was 300 billion in debt. We were a creditor nation at that time. Once we came off the gold standard, we then became a debtor nation. And how do we become a debtor nation? Well, we began selling U.S. treasuries. And now we have to pay the interest on those treasuries when those bonds come due. And so now we have all of this. I mean, look, 71, in 50 years, we've gone from 300 billion in debt to 37 trillion in debt. And there's no way to pay that off. Now, there has been talk, President Trump has mentioned about, possibly going back onto the gold standard. If that were to happen, gold would immediately shift up to about $25,000 per ounce. That, I don't know if that's in the works, but he has talked about that in previous years. And he's mentioned when he did his SEC filing to run for presidency, he mentioned he had between $250,000 and $500,000 worth of gold. This was back in 2020. So gold acts as a hedge. The reason why it's a hedge is because it protects you, right? So as the dollar keeps losing value, that causes the gold prices to go up. And so I would say, the best time to plant a tree is 20 years ago.
Right.
The next best time is right now. Do it now before what Robert Kiyosaki calls the everything bubble crash. Do it now because back to that $100,000 in the bank, if the stock market crashes and the debt crashes and this bubble that Robert Kiyosaki talks about comes crashing down, well, let's say you you just followed what, most, like Forbes says and T. Rowe Price says, take 30 to 35% of your portfolio and park it in precious metals. Well, paper can devalue almost instantly. If you've got $100,000 in cash or $100,000 in stocks, they can become worth $5 in minutes. But if you still have $35,000 in gold and you suffer this loss in paper assets, guess what? You're not going to have a repeat of what happened during the Great Depression in the 1920s when investors lost everything and were jumping out of the windows. You won't be having that today because you have hedged yourself, you have protected yourself. That's why gold and silver is so important.
So, according to this article, it said gold prices held steady on Thursday as investors awaited key U.S. economic data for further insights into Federal Reserve policy, with the slightly weaker dollar lending some support to bullion. So here's the economic data that they're talking about. It just came in. So this is from Reuters. This is from today. It says U.S. economy notches fastest growth pace in nearly 2 years in the second quarter, which is a revision, by the way. They said the economy wasn't growing as fast, but it is. So the summary from this is second quarter GDP growth revised up to 3.8% rate. Consumer spending accounts for the upgrade into growth, and weekly claims for unemployment benefits dropped 14,000 to 218,000. So the U.S. economy grew faster than previously estimated in the second quarter amid strong consumer spending and business investment, though momentum appears to be slowing as the effects of tariffs and policy uncertainty start to filter through. The quickest growth pace in nearly 2 years, reported by the Commerce Department on Thursday, also reflected a sharp contraction in the trade deficit as the flood of imports slowed. The economy's resilience was underscored by other data showing strong demand for business, for equipment in August, driven by artificial intelligence spending boom and a drop in first-time applications for state unemployment benefits last week as companies hoard workers. The data at face value suggests further interest rate cuts from the Fed were probably unwarranted. Tepid hiring blamed by economists on President Donald Trump's import duties and an immigration crackdown caused job growth to almost stall in the 3 months through August, prompting the U.S. Central Bank to resume its policy easing last week. So, when I read that, I'm not smart enough to know exactly what it means, but it sounds like they're contradicting itself. That the economy is booming, right? It's growing way faster than they thought it was. And unemployment is down, but somehow they spun that just now out of Reuters to make it look bad. What do you make of it?
Well, there you go. There's right there is your answer. Reuters. Number one. First, thank you, President Trump, because it's his policies that are causing this economic boom and this growth and the decrease in unemployment. But then, Reuters doesn't care about President Trump. They're not a friend. They're not a friend to Republicans. They're not a friend to conservatives. They have their own agenda. So when you see contradictions like that, really what they're trying to do is they can't take away the good picture, so they have to add in all of the bad things to make it look like, well, we're really not doing that well. But look, this thing started, they said the fastest growth in 2 years. Well, 2 years ago, who was in office? The Biden-Harris administration.
Right.
So, Trump has only been in office, 8 months, 9 months? And look at the boom that we're beginning to experience. So see, they don't want to put the onus on that. They want to try and spin it like, well, yeah, but we have these other things. Look, they're following suit. Look, we've got, all the tariff money that's coming in, is offsetting a lot of the money that they say we don't have because we got this boom of all this extra income. I wholeheartedly support these tariffs because, look, for decades, we've allowed these countries to get 2, 3, 4, 5% tariffs on us while we're paying 20, 30, 40, 50% tariffs in return, including China. And I think that I think that's fantastic news. And all I can say is thank you to President Trump for putting in sound quality policies that are making this nation grow economically.
And so the San Francisco Federal Reserve President Mary Daly said on Wednesday she fully supported the decision by the Fed to cut its policy rate last week and expect further reductions ahead. So they're going to.
I hope so.
So they're going to keep cutting the interest rate. That's what because they cut it 0.25 basis points last week,
right?
And now they're saying they want to cut it even more. And you say that's good.
I hope so. Well, look, when you cut interest rates, what happens? The economy grows more. We're spending less on interest. People can afford homes. I mean, at the interest rates that we've had between 5, 6, and 7% over the last 3 years, you can buy for $100,000. You can buy a one-bedroom house. Now, if we can get it down back to 3%, now that same $100,000 will buy you nearly a 3 or 4 bedroom house with a 2-car garage and a backyard, because now you can afford more because you're paying less interest and you've got more money going to the principal. I was really disappointed when they only cut a quarter point. I really would have liked to have seen them cut a half or a full point, and I would like to see them cut at least another half in October, and I'd love to see them do another one at the end of the year, because that will stir up more economic drive and gains in the market for investors and for the mom and pop and for the small guy like you and me.
And but when you cut interest rates, don't you run a risk of spiking inflation? Isn't that the worry?
Well, interest. Well, when there is that possibility, but here's the thing. When they raise interest, what they're doing is they're pulling money out of the market. That's how they get the money out of the market. So when they're cutting interest rates, there's less money to be used, but at the same time, it has an overall effect on the market where it will spur more activity in the market. So I don't think that we're going to have more inflation. They were saying, and I hardly believe that most of the inflation that we got during the Biden-Harris administration was overspending, too much money in the market, and then the shutdown from COVID, not allowing, products that were flowing from other nations in so that people could buy. Those are the things that caused the prices to go up. So me personally, I would rather see lower interest rates and more market activity, because investors love low interest rate. They love low interest rates because now they can go buy more real estate. They can invest in real estate. They can invest in commercial properties. They can buy a host of things, and it's a lot cheaper. So, more money in the marketplace, more dollar bills is what causes more inflation. We're taking some of that out of there. I don't believe we're going to have more inflation.
Well, it looks like you're going to get your wish, because Trump's Fed pick doubles down on calls to aggressively cut interest rates.
I like him.
He says that the rate should be below 3% by the end of the year, and dismisses fears of U.S. president's tariff stoking inflation. So it looks like you're probably going to get your wish. But I just want to let people know. So Safe Haven Bullion, which tends to thrive in low interest rate environment, which looks like we're coming out to, hit a record high on Tuesday of 37.90, 80.82.
Yep.
So tell people, what does this mean for their... Now, I've told people for a while, I'm invested in my retirement. I have a chunk of my retirement in gold and silver.
Good.
And so what is that? So what do you offer people now who are looking to do that?
So our main goal is to help people protect themselves. Our goal is to help you, depending on what your worries are, are you worried about the BRICS nations? Are you worried about $37 trillion collapsing? Are you worried about, bank failures? We had 7 bank failures under Biden. We've had 2 this year, which is just an extension of the policies that were already in place. Are you concerned about, what are your concerns? There are a lot of things to be concerned about, a devaluing dollar, the dollar losing its value. our job is to help you come up with a game plan, right? And no two game plans are the same. So for me, gold and silver, I'm saving because I want to have money for my children's children. I want something to pass on down to all of them. And but your game plan might be, hey, well, you know what? I'm going to retire here in the next 10 years, but I still want to be able to live the same lifestyle that I have. As I mentioned earlier, there's a lot of retirees coming out of the workplace. I mean, out of retirement into the workplace. I just saw some stats that 20% of retirees now are back in the workplace, and they're either working full or part time. Another 17% are considering coming back into the workplace before the end of this year. And this is from T. Rowe Price. They did a study, and it was cited in Forbes. And they're saying that overall, 50% of those that are retired are still considering coming back into the workplace because they can't afford to live the way they were living, and the money that they saved now is not taking them as far as they thought. So let us know what your concerns are and what your game plan is. If your game plan is to protect yourself, then we can help you do that. If your game plan is to just buy low and sell high, we can do that as well. And something special for your viewers, by the way, Jimmy, is we are doing a thing where they have to call. There is some qualifications, but we will cover the life of your IRA. We'll cover the fees for the life of your IRA. And if you've had an IRA for 10 years or more, those fees can really add up. The average retirement or the average retiree saves for about 35 to 40 years. And, all that money, if it starts drying up, if it starts getting devalued, if it starts losing its purchasing power, you have to do something. And so that money that you're paying in fees, over 10 years, 15 years, 20 years, 30 years, that could be $20,000, $30,000 that could have been reinvested in something that would expand, your savings. So if you call us, let us know what your concerns are. We'll help you come up with a game plan, and literally we'll help take, a portion of your cash or a portion of your paper assets and put them into precious metal, and we'll cover the fees for life. And that's for your viewers.
Well, I couldn't be actually more thrilled that I got interested in gold when I did, because just in the last year, since last September, gold is up approximately 40%. Gold is up approximately 40% just in the last year. And they say it's going to keep going, correct? They predict $4,000 by the end of the first quarter of next year, right?
Yep. So right now, we got economists that are expecting gold to hit 4,000 between the end of the year and maybe the beginning of the third quarter of 2026. On silver, today silver is up to $45. It has hovered between the 22 and 24 dollar mark for, I don't know, a decade, 2 decades. It's always been suppressed by U.S. banks so that they could keep purchasing. Well, it's finally broken out of that, and economists and bankers are saying that they expect silver to hit between $70 to $80 by the end of this year or the first quarter of next year. And there is a lot of industrial buying and use for silver. AI, you mentioned AI earlier. AI is a huge consumer of silver because now not only are they starting to develop AI, they've got these AI machines, but now they're taking these learning machines, and they're taking them a step further and creating even new machines. And silver is the big component that's used in these servers and these cloud servers for using AI. So I would say, let's say you've got a small IRA or a small 401k, but you want to get in and protect what you've got. Silver right now is highly undervalued. It's been undervalued for a couple of decades. Now's the time to get in, and you could buy a lot more with a little bit than you could with gold. Not that I'm poo-pooing gold, because gold it's not going anywhere. That same $20 gold piece from 1920 that would buy you a top end suit, the top of the line suit. Well, that same $20 gold piece today, depending on, the designer, the year, the quality, is probably between $40 and $60,000. That same $20 gold piece will still go and buy you the top of the line suit that you couldn't buy with just a few dollars. So yeah, I would say jump in ASAP.
And so how do people get a hold of you at Monetary Gold?
So they can visit your site, call the number that's on the screen, and speak to somebody, and we'll give you the lowdown. Now, there's a free guide. You can ask for the free guide. The free guide basically will kind of give you an insight to what's going on in the world, and it's 3 easy steps to protect yourself. And I think it's jimmylovesgold.com.
That's it.
I believe.
That's it.
Visit jimmylovesgold.com, fill out the form, and somebody in the office will give you a call, and they'll chat with you and kind of give you an idea based on your concerns, some of the things that can be done to hedge yourself and protect your money.
Okay. All right. Well, interesting talking to you. I couldn't be happier that I have a chunk of my retirement in gold right now, because last year,
Good for you.
Last year it was, it was at around $2,600 a troy ounce,
Okay,
and now it's at $3,700. So that's quite a big increase. So, and I didn't do anything.
Yes, it's in during Trump's first term, gold went up 53%. This year, since he's been in office, I think it's already up 41% just since the beginning of his inauguration. So gold is going through the roof because there is so much stuff going on in the world that's putting pressure on the markets, on gold and silver, or not gold and silver, on the dollar. Yep. And so this is how you protect yourself. You keep some of it socked away. And here's another thing that people should consider. There are 13 states right now that have enacted legislation to make gold and silver legal tender, and there's another 14 states that have pending legislation. So if the dollar collapses the way Bank of America says, if the dollar collapses, well, now you'll have several states where gold is legal tender, where you can go in and buy with gold and silver. For example, that $20 gold piece I was telling you about might be worth $50,000, right? You could go in and use that as a down payment on a I don't know, not a Maserati, but a very expensive car, right? If you've got a $5,000 gold piece, you can walk into the dealer in Utah and say, "Hey, here's my down payment. I'd like to buy that Ford F-50, and here's my down payment." That's already reality in 11 states. So that's a kind of a big deal. So if the dollar collapses, many of these states will already have set it up so that you can still continue buy and sell with your gold and silver.
Okay, well, David Schroeder, I appreciate you coming on. Thanks for supporting our show. We always are grateful for advertisers because we know we have a target on our back here. We do independent journalism that goes against the establishment all the time. And so we've been targeted before and we've been censored. And you never know when they're going to pull the rug out from underneath us. So I'm always grateful to our advertisers who help make sure we can continue. So thank you very much. And everybody over at Monetary Gold, and everybody check them out if you're interested in precious metals. I know I am. Okay. Thanks, David. Good to talk to you.
All right. Nice talking to you, Jimmy. Okay. See you soon.
Hey, what are your biggest concerns right now when it comes to your money and your savings? Is it the fact that the national debt is now over $37 trillion and climbing by another trillion every 100 days? Is it inflation, the high cost of living, and the fear that your dollar buys less every single month? Well, maybe it's the fact that U.S. treasuries are no longer the bedrock of global finance, or that BRICS nations are actively working to dethrone the dollar. Even Bank of America has warned the dollar has already lost 10.7% of its value since January and is teetering on collapse. Add to that banks failing and the domino effect of debt threatening to bring everything down with it. If you're worried about your savings, your 401k, or your IRA, you're not alone. But here's the good news. You don't have to sit and wait for disaster. Call my friends at the Monetary Gold. They'll help you build a personalized game plan that moves a portion of your vulnerable paper assets into something real, gold and silver. Unlike the dollar, unlike Wall Street, precious metals never lose their value. Robert Kiyosaki calls this the everything bubble. And when it bursts, you don't want to be left destitute. There's only one answer. Protect yourself with precious metals before it's too late. Pick up the phone, call Monetary Gold today at 800-476-7790 and secure your future. Visit jimmylovesgold.com or call 800-476-7790 right now. Come see me on tour in Hermosa Beach, Sacramento, San Francisco, Melbourne, Australia, Sydney, Australia, Brisbane, Burbank, California the day after Thanksgiving, and Pottstown, Pennsylvania. Go to jimmydore.com for a link for tickets.